have Ken joining us. So Ken is down in the Cayman Islands. Ken, you work with Zedra, and he is the head of governance and compliance. Ken, how long have you been in compliance?
As long as too long. I actually don't want to reveal how many years because people can start to guess how old I really am. So let's just say a long time, a long
A
time.
long
Over
time.
20 years, over 20 years.
Yeah, yeah. Oh, well, yeah, whenever you go, oh, too long. Yeah, you know it's over the 20-year mark.
Yeah.
And what would you agree with me? I think I've also been in compliance, AML compliance, since I want to say 2004. I got my
Mhm.
certification in 2007 from International Compliance Association. I believe you got yours from ACAMS. Is that correct?
Yes.
Yeah,
ICA.
I
Yeah.
see. Oh, I see too. Yeah, I thought it was a
Yeah.
very, very good
Yeah.
one because I was in London at the
Right.
time, so it was
Right.
excellent training. Um, but yeah, I think I've seen the most changes in the past 5 years, maybe six or
Yes.
seven. I think in 2018, I remember kind of thinking, oh, it's changing. And then lately, it's just
Mhm.
like it's been changing a lot. Would you agree as well?
Yeah, absolutely. I think in the last sort of 10 years, the compliance officers, the expectation from the compliance officers definitely evolved from being more of a person who is looked down upon as a cost function, but to more in terms of being somebody as a business partner. So
Yeah.
businesses are expecting you to navigate challenges, come up with solutions rather than identify problems. And I think that's been the biggest change in terms of the way the compliance role has to be performed in any financial services organization.
Right. Yeah. So it's less of an administrative support role as when I started, and now more of a strategic uh, partner, as you say, in the business to kind of help.
Yeah, absolutely.
Yeah. Yeah. It's more of a
Absolutely.
strategic part. So
Yeah.
it's a much more valuable role now than just an administrative support system. Okay, we've got about one more minute, so I'm going to go ahead and move on to our next slide. Now, you work with Zedra, and Zedra I mean, it's a global firm, correct? It's not just Cayman.
Yes.
Yeah.
Yes. Yeah. We have offices all around the world.
Hmm.
Um, we primarily deal with private wealth management, trusts, corporate services, and in the Cayman Islands, we have a very good and fast-growing fund administration team. And
Okay.
so yes, it's very, very, very exciting to be part of the team at a time where digital assets are growing, and Zedra are starting to grow their business in that space. So it's very, very exciting time, but also challenging times as well. Obviously, you have to be
Yeah.
aware of the financial crime risks that are associated with digital assets. So yes, very, very, very exciting.
Well, that's good. Very exciting for you to be in that space as well and to support Zedra as they're growing. And congratulations that they are growing and expanding their services as well. Before we begin, because it is now right at top of the hour, and so again, I probably am jumping a little bit ahead. So today we're going to be talking about the cost of KYC, and they always say, compliance is a cost to doing business. But what we're going to be looking at is specifically today is the onboarding delays. That how that strains the relationships. And a lot of people think onboarding delays and the onboarding processes just strains the client or customer relationship, but it does also strain even internal relationships. Your business development team, they go out when the business, then all of a sudden compliance has these rules and processes in place that just does not fit anymore in all cases. Um, so that's kind of like, everybody's got their own agenda, so to speak. Business development's going out to win the business, and then they are conflicted with, have friction with compliance when we say, nope, you can't onboard that client that you just spent thousands of dollars trying to win. So we're going to be talking about that and how that kind of impacts and some of the opportunities out there that are available to us. And so a little bit of housekeeping though before we do begin. This is not legal advice. This is just informational training purposes only. And we do last about an hour. Sometimes we do go over about 10 minutes if you can. I do have a handout for you that everybody is welcome to download. It's a vendor risk assessment template, something that we'll talk about in one of our slides later. So please go ahead and download that. You might find it useful. We do issue certificates of attendance that will for our live attendees only. So those of you joining us today, you'll get that in about an hour. And see, there's also if you can post your questions. I said here questions at the end. But you can post your questions at any time. Between Tom and I, we'll be kind of looking at those questions and answering what we can. Even comments. If you just have a comment, go ahead and use the question box, because the chat box for some reason is never not allowing anybody to post chats. And of course, we do have some upcoming topics. Tom, we have one in July too, right? Do you remember the topic in July?
Yes, it's called Gatekeepers of Compliance.
Okay.
With
okay.
Angela Neely from RiskPass.
Okay. Fantastic. All right. And then the MLRO supervision one, I'm not sure if we have the date for that, but yeah, so do join us. We do try and do at least one a month. I think we take August off because most people are on holiday. Okay, and then our next slide, we do have 3 polling questions. So if you can take this on, we'll go ahead and launch the first poll, Tom. And we just want to know, how long does it take your organization to receive KYC? Whenever I talk about that, I'm like if you were to onboard an individual, like a director, customer of a bank, or a director or shareholder of a corporate entity, how long is it between the time you ask for the KYC and the time that you get it? On average, how long does that take? I have had people report to me that for them to onboard a client, it sometimes takes them 6 weeks. So don't be afraid if it takes you a long time. It's just we just want to kind of get a good grasp of how long it's taking on average. So I don't know, Ken, can you see the results currently?
Yes, I can. I can.
Mm-hmm. Are these numbers surprising you by any chance?
I think if the question is framed in terms of how long does it take for an organization to receive KYC, I think that question, I wouldn't be surprised if there was a fairly high number that were between sort of like 1 and 7 days, just simply because the client might be really highly motivated to onboard and start the work.
Mm-hmm.
However, if we're talking, the question is, how long does it take to actually complete the review? So the actual end-to-end process, then I wouldn't be surprised if we had a higher percentage in the 2 to 4 weeks, because I think sometimes the whole process of actually getting certified documents, reviewing the certified documents, sometimes they're not certified correctly or authenticated the way you'd want it, and you have to go back to the client. I think that back and forth is something that I've seen as a practitioner actually sometimes actually almost extend that process to more than 7 days.
Okay, great. So we can go ahead and end that poll. So I think for most of we got 10% saying it's less than a day. 41% is the majority, so that's 2 to 7 days. 21% are saying 8 to 14 days. 18% are saying 2 to 4 weeks. So again, how you interpreted that question, like he said, if end to end versus just getting like an ID verification and any kind of questionnaire, they're saying 18%, and 9% are saying more than 4 weeks. So it could be just due to a little bit of how that question was interpreted as well. But that's about what I would have expected. The next one is, how does your organization verify IDs currently? So your options are certified copies of government issued IDs received via email. I thought I would split this up a little bit. Certified copies of IDs received via a client portal or some type of vault system. Third option is they utilize a eKYC or digital onboarding system. And then I thought, well, maybe there's some other options out there that I don't know about. And of course, for those who don't know or you're not in the AML space, because we do have people like tech and regulators listening in as well. So, but yeah, so most right now, we are looking at over 60% of saying certified copies of government issued IDs received via email, with about 11% saying they are using a client portal or vault. And we're running at about, see, right now 13% are using an eKYC digital onboarding system, 9% other. For those who are saying other, I would love for you to put in the little question box what that other is. I mean, Ken, do you have any idea what the others could be?
Oh, that's very interesting. It might have been interpreted as you know, face-to-face business. Maybe some members of the audience that they actually physically see their clients. But that's only that immediately spring to mind as why they wouldn't actually require verification necessarily.
Yeah. Okay. Great. All right. So we can close that poll. But yeah, the majority are still receiving certified copies, whether it's through via email or a client portal or vault, with the majority still receiving everything via email. And only 13% are already using a eKYC or digital onboarding system. And then the next poll question is, if you are looking at eKYC or digital onboarding, what is the biggest barrier? Or if you did adopt it, what was the biggest barrier to adopting? Okay, so the options that I put here was that maybe you don't have any regulatory certainty, it will be accepted. Maybe it's the cost. Maybe you're uncertain how to integrate it with current systems, or you just don't have enough information to make a decision, whether or not you will do it, or whether or not which tool to use. And so yeah, so these are all kind of potential barriers. So currently, it seems to be cost is in the lead. And I can see that. I can see, especially for smaller firms, because sometimes it's like if you're only going to use it a few times, it can be, 20 bucks a pop, kind of thing. Versus if you're onboarding a lot, like a big bank will have some cost savings because they're kind of buying in bulk, so to speak. But yeah, so regulatory uncertainty seems to be the lowest. So it seems to be the regulators are giving a bit more, being more accepting, or kind of giving more guidance that they will accept it. So that does not seem to be much of a barrier, but there is about 13% saying that they still don't know. Cost is running about 40%. Uncertain how to integrate with current systems, that's 22%. And it's a big, what our discussion will be a little bit today. Also not enough information to make a decision. And so I'm hoping today we can help those of you that are in that group as well. So those last two are about 20% each. So are these kind of what you would expect too, Ken, these responses?
I think it's hugely interesting and fascinating in terms of you know, what the prohibitors are. I actually would have expected the regulatory uncertainty to be a higher percentage, but it's very, very, I think it's very comforting that, you know, members of the audience are aware of, you know, that the regulators around the world are, you know, taking advantage of the Financial Action Task Force recommendations, where there's definitely an encouragement amongst using. So that's great.
Yeah.
I think in terms of, this is really going to be useful because it's going to frame the actual presentation. Obviously we've got a lot of slides, not a lot of real estate in terms of time to cover them. So I think what we'll do is use some of these poll results to actually focus on some of the areas where I think it might be interesting for members of the audience, especially in terms of cost, because again, some of the digital verification tools are actually a lot cheaper than you would expect. And I think members of the audience would find that fascinating. And then also in terms of integration with current systems, I think obviously that's going to be a topical conversation that's going to be covered in the presentation. So very interesting results.
Yeah,
Food
I
for
thought
thought.
the regulatory uncertainty was going to be a bit higher myself. So again, I agree. Very comforting to know that people are feeling like, okay, we can do it. Just how and how much is it going to cost? All right. Well, thank you very much, everybody, for participating in that poll question. Again, going back to the handout, one topic we will be talking about is when you are assessing technologies, and again, this one kind of goes back to that answer of maybe they don't have enough information. It's called a vendor risk assessment template, and I used it. I like to kind of drip a little bit how I use AI in these webinars these days. I used it using Claude AI, a particular model, and that is my prompt. So if those of you who are exploring these LLMs and how to kind of use it, I'd like to kind of just share that as well.
Kimberly, don't steal my thunder. It's going to be covered in the presentation. Please.
Sorry. I like to just kind of show people this is what I did. This is what, I feel like it could work, but yeah, sorry about that. But yeah, so and I asked Ken and I to keep our cameras on for this one because you'll be able to see how passionate we are about these new emerging technologies. Because as we both, I think Ken, we talked well over an hour the other day, and we were just both of us on the same page with our how
Also
excited we
because
are.
we love the mark. We do love the mark. So I think we realized that we needed to maybe find some shortcuts in the presentation because we're both lovers of the mic, right? But it was
Exactly.
really a really fascinating conversation.
Yeah, it was. So the slides that you're going to get all the slides, but we are going to probably rush through some of them, maybe even, not even cover some of them, but we just thought, let's just see how the conversation goes. So Ken, again, welcome for presenting, being a panelist today. And I'm going to let you kind of just take it from here.
Okay, thank you so much. I've frequently attended silo webinars and almost feel as though it's an absolute honor to be invited along. Kimberly, you're a little bit of a legend in the compliance field. Yeah, truly honored. Before I kick off the presentation, it's worth me saying that the views I express here are my own personal views and not those of my employer. So I think I'll do the usual caveat before I start the presentation. So what I wanted to do is, obviously we don't have a lot of time, and I believe Kimberly, you are going to share these slides. So especially on the digital sort of verification side of things, there's going to be there's copious amount of information in the slides. There's links there. So I think you're going to leave my email address. So please, if anybody in the audience really wants to know a little bit more, and obviously just because time prevents us from covering those slides in any great depth, reach out to me. I'm more than happy to help and talk through at length in terms of some of those tools. So first of all, I wanted to start by actually trying and setting some context around onboarding and why it's so important, and actually the magnitude of the challenge on onboarding. First of all, onboarding is a revenue gateway, so that's going to create a lot of tension because that's the only way that the businesses make money. So it's going to create a lot of pressure, especially on us as compliance professionals, to accelerate the onboarding process. And where delays occur, at best, that could lead to internal tensions with the teams involved, especially your BD teams. But at the worst, it can actually lead to loss of business as customers get so frustrated, they move elsewhere. So again, that compounds the tension and the importance and the challenges that we face as compliance professionals. Also, we talked about the face of compliance and how compliance is viewed. Unfortunately, we have that tag as being a bit of an inhibitor, a blocker of business, because obviously we are almost the gatekeepers in terms of bringing in money, and that again causes some tension in itself. So it is a challenge for us as compliance professionals, and my presentation is really looking at things from the lens of a compliance professional rather than another particular professional services professional. Then I'll rattle through some of the other slides here. So essentially the magnitude and the challenge of onboarding is really is emphasized by the fact that we are subject to factors that go beyond our control. So where you have weak compliance culture, where the tone from the are quite weak, that does have an impact in terms of the amount of importance that's placed upon onboarding. Sometimes you have a certain amount of apathy from the operational team in terms of the importance of getting some of the information. That has a knock-on effect in terms of from us as compliance professionals. We don't have enough support from business leaders, then that causes some delays. And also when you look at audits are obviously essential part of the process in terms of managing regulatory risk. But if they're coming into the process too late, obviously exposes regulatory risk, but also you're not able to fix and address some of the issues or even enhance some of the processes around onboarding. So it is a challenge, and the magnitude is huge. And I think Kimberly wanted me to focus on this particular part of the slide, and it's me venting and talking about my bugbears as a compliance professional. So these are things that I've been guilty as a compliance professional, and I'm sure a lot of us compliance professionals, even though we don't want to admit it, we have been at times guilty of this. And the first point here is risk appetite must reflect the business's position and not personal judgment. And I think that's very, very important. I think as compliance professionals, we naturally are in that position because we are skeptical at very nature. And we have situations where you may have a potential client come through the door. Maybe in terms of their public profile, you might not like, maybe their political affiliations. Maybe you might not even like the fact that they might have a moustache, and you might not be a big fan of moustaches. Anyway, you have certain factors that make you almost guide your resistance towards onboarding that client. So you need to be very, very mindful that when you are designing any compliance framework, it's important to have clarity of risk. And it's that risk appetite that's being developed. That is the at-risk appetite that you must be using in terms of the mindset they need to adopt when you are going through that onboarding process and the review.
Yeah. And just I was going to say, just to kind of pitch into as more, because I am seeing more and more organizations kind of move to accepting or going after the digital asset sector for new business. Every business has to keep growing, really. And if they just ignore the digital asset space and don't serve it, they could lose a lot of business and eventually go under. I mean, it's just the way of the world right now. And that's what I'm seeing. And I think that's one of the reasons why this is very important, especially if you are somebody like us that's been in the space for 20 years and we're dealing for the first time with this new sector that's been kind of like, oh, it's higher risk, but then we're not changing our onboarding processes to fit the risk appetite. The organization is saying, we're going to go after this. We're happy with it. We're willing to take that risk. So we kind of have to just kind of adopt our processes to cater to that. Is what and a lot of people are very struggling.
Yeah, exactly. And I think it's covered in a slide where I mentioned that digital assets are here to stay. It's now part of mainstream finance, whether we like it or not. I think as compliance professionals, our obligation, if we are going to remain employable, as it were, we need to be understanding the financial crime risks associated in the digital asset space to continue to be relevant. And just because a business engages in, has an appetite for accepting digital asset clients, that just means they have a higher risk appetite. That doesn't mean weaker standards. It just means compliance professionals, we need to deploy stronger safeguards. So that's a very important sort of like distinction, because I do remember 10 years ago when digital assets started to evolve, a lot of fellow compliance colleagues were like, oh man, I don't want to be any part of that. I don't want any part of that. That looks way too risky. But I think as the sector has matured, I think there's a lot more comfort in financial crime risks and how to manage them. I think as a consequence, as compliance professionals, we shouldn't be left behind. We need to be part of that conversation and make sure that we're fully informed of that the risks.
Yeah, and I loved that line: avoid generic controls and processes, apply fit for purpose onboarding and mitigation. So if you are onboarding a traditional corporate entity, director shareholders, it's a holding company, something like that, that's one thing. But then they're trying to take that and apply it to onboarding a foundation that's going to then have, have another structure that's going to be issuing tokens or something like that. That's are somehow involved in digital asset investment or ICOs, which is initial coin offerings. So again, you can't take that traditional approach and use that to apply with these new guys. And it doesn't mean just automatically enhanced due diligence, automatically high risk and then EDD. That's not what it's about, in my view. It's about finding another approach to onboard these new clients.
Yeah, it does drive me insane sometimes where in businesses there's a conflation between commercial risk and financial crime risk. So if I give you an illustrative example of an inexperienced fund operator wants corporate services, there's a standard enhanced due diligence is to do source of wealth checks, right? That's the standard staple safeguard. But a source of wealth check is not going to address the elevated risk associated with an experienced fund operator. A more safeguard would be, getting insurances around the strength of the investment committee, supporting the inexperienced manager in terms of making investments. Is there a valuations advisor as part of the team to help, supplement the lack of experience of that investment manager? That's a more aligned safeguard. So if I use the example, I go to my favorite restaurant. I normally order, because I'm a creature of comfort, I'm a compliance professional. I normally order pasta, but one day I might decide to be adventurous and daring and order some soup. I don't expect the waiter to give me a knife and fork, right? He needs to give me a spoon. You need to apply the right safeguards to address the actual elevated risk identified.
Okay, yeah. All right, Tom, just do pitch in if you see any questions as well. So we're now going to talk about accelerating that onboarding experience. I'm going to kind of skip over this because I think it's pretty, relevant. Like I say, we do see, onboarding is a revenue gateway. I do have the story of every time when I was a compliance officer in London, every time I walked into somebody's office, they just go, "Oh, what now?" So again, I was like, really, I'm here to help, not to say no. So again, I wasn't trying to block the things, but again, I really liked this slide again. Anything you see with the big star is something that I want to pause on this, because it's that second line of defense for those who this is a great for if you're not familiar with the first, second, and third lines of defense. I think it's really come out of Europe, maybe a little bit of the US, but it is the compliance function is that we are supposed to help design the framework, oversee these challenges, and we advise that first line and as well. But there's a couple of slides here. We talk about that framework that I think is so overlooked with compliance. Again, we kind of get stuck in our forms and our questionnaires and checklists, and with new industry sectors being created, such as the digital asset space, we need to actually go back to these frameworks and go, all right, this worked 5 years ago, but we need to now find some other alternatives and options. Is that what you're kind of seeing as well, Ken?
Absolutely, and I don't know if we're going to cover that particular slide, as we said that we're going to share these slides with the audience, but I think it's very, very important to acknowledge the importance of designing an effective compliance framework with solid foundations. So I'm a person who likes to use analogies. So if I'm looking at the analogy of a sports team, for example, I really can't believe I'm going to use this as an example, but much to my profound dismay and disappointment, Arsenal were Premier League champions this year. And the reason a big contributing factor for their success was due to a solid foundation built on a defense, a great defense. And it's the same way with the same principles that need to be applied to us in terms of where we are looking to fulfill our role and accelerate onboarding. We need to first have strong foundations. We need to have a clear, structured compliance framework with a real clarity in terms of the risk appetite. We're able to, identify the appropriate safeguards very quickly.
Mm-hmm.
So yes, I didn't realize you starred this slide, but yes, the prerequisites of Accelerate. That's a great segue here. So I've already covered the first point, and the second point in terms of clarity, in terms of risk appetite. I don't think you can get anywhere in terms of onboarding if you don't have a skilled team. And to actually establish a skilled team, you need to have appropriate trained professionals. So that brings to life the importance of why we have compliance training, AML training every year. So a lot of non-compliance function audience members are like, oh my God, it's compliance training again. Right?
Exactly. Exactly.
But there is rhyme to the reason. There's reason, rhyme to the reason. The reason is we need to have, teams armed with efficient knowledge to be able to accelerate onboarding. And then again, the other important prerequisite is collaboration. So you need to have good relationships with the stakeholders involved in the onboarding process. So obviously every members of the audience are probably working in different types of areas in financial services, but so therefore there may be different interactions within the functions in the organization. But whoever's involved in the onboarding process, you need to collaborate. So if you're working in corporate services, you would work in unison and being in harmoniously work with your finance team. And then obviously if you're working in different types of sectors, where the BD team is very, very important. You need to work, collaborate very well with your business development teams.
Mm-hmm. Yeah. And what does a strong framework look like to you? So I put in these two little bullet points. It's like who does what, in what order, and also to establish terminology and definitions within your team, because I've heard people use, oh well, it's a active client. Well, it's not an active client because we haven't gotten the actual sign off yet that is required. So it's a potential new client. Those little terms make a big difference, I think. Also, and I mentioned to you, for instance, like sometimes whenever I'm working with silos clients, when we're kind of implementing them, one of the things I always ask is like, well, who's doing the screening result? Who's doing the screening reviews? Because sometimes I've noticed like, you'll get an analyst who's getting the KYC and putting it into the system, and then logging everything as complete. But then there's wait a second, there's a hit on this. It's like, no, you really can't do that. It's those little things. But because prior they were using maybe a third-party outsource provider to do the screening and things like that. It's like, well, no, we now need to relook at, should they also be looking at that? And that in itself is a different skill set than just somebody uploading, getting KYC and uploading it to a system. So even within AML, I think you need a little bit of different sets of skills from the administrative to the true analyst, somebody who's really looking and go ahead and saying, all right, where's our risk? How can I mitigate it? And what else can I do to onboard and get assurance?
Yeah, I think it's important to establish roles and responsibilities, and obviously if there's regulators in the audience, and document them. And what is equally as important is you have the roles, responsibilities, and controls. So what you're really pointing to is really controls and controlled gateways. It's very important that you have those controls in place to then demonstrate to the regulator that before you are entering into a client relationship, you are undertaking the required processes of screening, of doing a risk assessment and collecting KYC. The way you set yourself up to fail if you don't have a framework that reflects the documented controls and the control gateways to actually prevent entering into a relationship without doing the necessary risk assessment, KYC, screening.
Yes, absolutely. And I've been very pleased as I see more and more. It's coming from the senior management. They're starting to get that, I think, more and more. So those of you who still don't have, I know many of us have policies and procedures manuals that are usually kind of very templated and rarely read, but now they're getting into more of that step by step. This is who's going to do what, and they're setting it down on paper. And I really love it when I see them doing that, because it's like, all right, they've got it. They've got it figured out here. And just kind of moving on, I just want to pause first. Tom, are there any questions, burning questions that we need to be answering for anybody on the?
Hey guys, we have had one just come in just a moment ago from a gentleman called Wesley. Should onboarding be always fixed to a procedure or tick box method, or should it be geared towards the assessed risk of the potential client?
All right. Can you repeat that question? Should onboarding
always be fixed to a procedure or tick box method, or should it be geared towards the assessed of the potential client?
I would have to say assessed. And Ken, you're the guest, though. I'm going to let you answer. How would you answer that?
I think maybe one of the sides actually covers this, but maybe we just don't have enough time to address this. But I think the latter. I think it's important that when you design any compliance risk framework, you are utilizing some of the expeditious channels that the regulations require. So there's, for all compliance professionals now, understand the simplified due diligence measures and the simplified due diligence approach. So many regulations around the world will have, permitted sort of channels where lower risk scenarios are identified that you can use, adopt a risk-based approach, and that's a simplified due diligence approach. So I would say, in terms of when you are designing a framework where you're looking to put it in place, an onboarding process, look at what your regulations say around low scenarios. And I think you become a business rather than if you are designing your framework where low scenarios are identified, you are actually given a expeditious route towards onboarding.
Mm-hmm. Let me ask you this, Ken, and I agree. I think there's always a set of maybe some minimum requirements in all cases, and then based on what that business or that client or customer is doing, and based on what your services you're providing to them, then you go, all right. It's like a decision tree, it's like, okay, we can do this in this instance, and if they're in this space, then we'll do it this way. You can kind of give yourself a little bit of wiggle room too, because it as well. But yeah, that's how I would address that there. Okay. I hope that answers Wesley's question. I did put here in this slide to make sure you are checking with your local, this slide here, again, it's starred because, again, Ken, I loved that phrase. Technology is not going to fix bad processes. Basically, it's just going to make them worse, if your framework's badly designed. So you're going to have to get your framework in place and then get your technology in there as well. So, so this basically speaks. Who said this? Is this your quote?
Yeah, obviously I put it in quotation marks to elevate the level of importance of myself. But yes, I do believe technology on its own is not going to address bad processes. It just exacerbates the problem, in fact. So
yeah, and costs
also,
you a lot more. Yeah,
exactly.
And this is when I saw that, I was like, this is spoken from somebody with experience. And this is where this experience. And of course, I always love to say, somebody asked me what's about wisdom, and I said, well, wisdom is usually gained from experience. Experience is gained from bad decisions in the past. We learn from that. So this I just love that, and it's so true. So don't rush to go out and just get a technology. Really make sure you've got your your frameworks in place, and then again, put the technology in place. I mean, obviously, we're both proponents of technology, and also check with your local regulatory requirements. I have come across a situation where the business had to notify their regulator that they were adopting silo. At the time, the regulator did not ever deny it, but the implication was that they could. So do check your local requirements about if you do have that. I mean, that was over in Europe, by the way, too. So I have not seen that yet in the Caribbean.
Yeah, so Kim, the one important point I wanted to make, and let's go back to some of the poll results in terms of integration issues.
Mhm.
I think you give yourself the best chance of a successful integration if you have a process which transposes well to a automated platform. So I'm going to shamelessly plug Silo here in terms of your particular automated platform. Now, you're not going to derive the maximum benefit of that platform if you're not haven't got a designed framework that allows you to transpose, what you do manually into an automated fashion. So I do believe that's a critical criteria that sometimes is overlooked before you start and addressing some of the technical implementation challenges.
Yeah, and it's when we talk about integration too, it's also if you've already got good systems in place, but it's just like you're manually going from putting data manually in this one and putting manually entering data in another one. When I talk about integration, it's like, can you get it's an API? Can the two systems talk to each other? So data can just kind of feed through, flow, kick off a workflow, kick off a notification alert, things like that. And that's a huge task, a lot of planning, a lot of work with IT, a lot of do the systems even have the technology, I mean, the ability to talk to each other, because sometimes don't ever assume that they can. Another great side, and again, this goes back to that template, that was that risk assessments. Now, what do you look for, or what are some of the pitfalls you've seen when you've been looking at technologies and done your risk assessment, and maybe just what is a risk assessment for a new technology?
Yeah, I mean, for me, before you go out to buy any technology, you almost have to adopt a mentality that I would say is similar mentality. If you go out to buy, an iron or a laptop, right? You will want to do your due diligence, and that's reflective of sound business judgment, business principles, and that's surprisingly that's actually reflected in the regulatory requirements. So, I mean, I have a brother who is very meticulous when it comes to buying any product or item. So before he buys an iron, for example, he will go on Amazon and check the reviews on that iron. Then after that, he'll go into Trustpilot and then do the reviews of Amazon's reviews on that iron. Then after that, he'll then build himself an AI agent to do reviews of Trustpilot and Amazon and every other review. So he leaves no stone unturned. But I think that mentality is something that we should adapt when it comes to putting together a risk assessment. We need to identify some of the risks that are pertinent to our particular business. So, for example, if you're going out shopping for eKYC tool, the eKYC tool could have all the bells and whistles, beautiful user interface, apparently wonderful user experience. It could be the most expensive tool on the market, but if it is configured so that for example, proof of address, the only way you can actually verify the proof of address is a utility bill. If you have the majority of your clients are based in the Middle East, that's not going to be of much use to you, because in the Middle East, typically, your customers don't have utility bills in their name. So some of the factors you've got to think about when you're doing a risk assessment is not just cybersecurity. You also got to look at, okay, how applicable, how useful can that application be utilized in your particular business. Now also can include demographics as well. Maybe you might be thinking about introducing technology like an AKC, but the demographics of your customer base are, let's say, north of my age. You know, it might not be. You know,
I
you
don't
might
think you're
not.
that old.
Don't be fooled. So you know, so that may actually sway your judgment. So I think in terms of identifying some of the risks, I think you need to be looking at, and then the slides talk about assurance levels. It's got to be fit for purpose. You've got to be comfortable around, you know, the strength of authentication when it comes to KYC tools, the system integrity. You know, cybersecurity obviously is an inevitable, you know, identification. I think you're going to speak towards that in terms of some of the misnomers and things that we shouldn't mislead ourselves into believing when we see certain credentials being you know, advertised and marketed by some of the vendors.
Right.
So
Yeah.
yeah, so I said, well, I'll leave you to talk about that particular.
Yeah, as a tech provider ourselves, so we are asked to submit risk assessments. They're called vendor risk assessments, and it's everything from, you know, who owns the company, which is important. You know, like we actually had somebody, I mean, this is 10 years ago, that was interested in either investing or buying Silo, and I won't, you know, it was just like said, I did my due diligence on them, and I was like, no, I don't want these guys owning the system. And so knowing who owns the company, is it a startup? Is it you know, not that I'm not saying startups are bad. I was a startup once myself. It is it's just kind of like, you know, are these guys, if we invest a lot of time and money, will they still be around? So you want to make sure that they have that commitment. Um, we're asked a lot if we have SOC 2 certification, and that is very, very expensive for smaller firms. So we do not have SOC 2 certification. Don't let that sway you and think, oh, they're not. SOC 2 certification basically is a checklist, and it's a $30,000 to $50,000 a year cost to get SOC 2 certified. But we do have processes in place that we just can't afford that certification check mark. Another one is awards. And when I first got into, so for those of you who don't know me, I was a compliance officer myself. I was not a tech person, and yet created Silo. So now I'm in the tech industry. But we were like, hey, you've been shortlisted for an award. And you know, at the beginning, it was like, oh, yay, that's great. It turns out it's all what we call pay to play. You pay them $10,000, $15,000, and suddenly you've won the award. and there are tech companies that will just display all these awards, but they paid for them. So do your due diligence on these awards as well. And the other one is cybersecurity insurance. It's hugely expensive. So we do. You said it great. You would rather avoid the risk than have to mediate the risk. So it's like, okay, so we just do pen testing services is what we do, just to make sure that there's no cybersecurity risk or vulnerabilities that we're unaware of. So we do continuous pen testing on ours, is how we kind of mitigate that. But yeah, so these risk assessments, again, that's one of the templates. That is the template that I attached. You can kind of change that. And so what do you look for, Ken, when you do a risk assessment on any new technology?
Yeah, pretty much all the steps aligned, which the slide particularly focuses on. And you know, you want to make sure that that it's fit for purpose. You want to make sure that it has, you know, it's usable for the majority of the clients that you want to utilize. You want to make sure you're actually going to accelerate the onboarding process, and that acceleration is obviously going to be enhanced if it's applicable to your product and also your client base. So one of the things I look at. The other thing is ensuring that compared to the manual process, there's an actual enhancement, you know, in terms of the process. You can introduce it, but it's got to be improvement. And this is why I'm a big fan of digital verification, because digital verification has a high, for me, in my own personal view, a higher authentication potential than manual certification. If you have received a certified passport from a notary, for example, that notary is obviously certifying that passport is a true copy of the original, and the photo bears a likeness to the individual. But that notary public isn't able to provide you with assurance that the actual passport is actually not fake. So
Yeah.
I believe that, you know, when you have eKYC tools that have that level of authentication, which it looks at biometric identification, those are the things you want to look for, because deepfake detection, a lot of us working offshore, we do a lot of our business on a non-face-to-face basis. So where we're looking for authentication, you know, using the right eKYC tool will actually put you in good stead. The other point, and I know we won't probably have time to cover it, and I know that individuals were able to look at the slides, is looking at digital ID. Digital ID is something where the technology which it's built on is decentralized. So therefore, that can give you greater protections in terms of you know, cyber risk, in terms of it's not, you know, held in a centralized server, it's decentralized. And that gives you a little bit more protection. So sometimes you'll see something is SEC2 certified. That doesn't necessarily mean that that organization has, you know, the privacy risk is greatly reduced compared to a particular solution that is built on Web3. So I think one of those things that you should look at is, you know, and explore is, you know, other ways of verifying that are built on technology like Web3, because Web3 provides certain potential advantages in terms of speed, customer convenience, and actually cost. There's certain a lot of providers out there, well, not a lot of providers, a few providers, emerging platforms that are looking to address that problem that we have around duplicative and repetitive KYC. You know, in terms of, you know, once you go to a bank, you know, you hand them over your KYC, and if they are not using a digital identity tool, it basically gets stuck in their server. And when you go to open another account or an insurance account or an online trading account, you repeat that process again and again and again. So it's repetitive. I think when you have Web3 gives the potential there for that process to be not siloed, pardon the pun, but more dynamic. You know, you're able to effectively authenticate at a high level, but because the digital identity is reusable, and you're able to then streamline the onboarding process so that other service providers can rely upon the actual verification that has been done digitally.
Yeah, and I think that kind of goes back to what we were discussing. You and I discussed a couple of days ago. It's like a lot of the offshore financial centers clients, they don't just use one firm, one corporate service provider. They're using a trust and maybe an asset manager here. They're using in Cayman, or they might be, you know, doing a registered office, registered agent, and BVI as well. Then there's the banking relationships. So it's like, again, just eKYC, and as you say, this digital ID verifications with this Web3, which you are much more of an expert on that than I am, is could really help the international financial centers kind of become the modern place to do business, because there could be a way to one individual to give their KYC to all of their service providers, and not have to, like, this one requires this certification, this one does eKYC onboarding, you know, this one does it their way, you know. Yeah, it could really help them too.
Yeah, the system is very fragmented, and if you look at countries such as Estonia, they have an EID program, national ID program. You look at Singapore. Singapore have SingPass and Court Pass, which again is around digital identity. It's not a coincidence if you look at their latest financial action task force evaluation reviews, they fare pretty well. And I know in Cayman we're introducing a digital national identification program, and that's great and it's fantastic. But I think that just really covers a certain section of our customers. The majority of offshore customers are based overseas. So, you know, the point you made, which is fantastic. If you are a fund operator, you are going to want to set up a fund. You're going to want to engage with a lawyer. You're going to have to engage with a corporate service provider. You're going to engage with a fund administrator. You're going to engage with an AML services provider. You're going to be a bank account you have to open. So there's like 5 or 6 different touch points. And for you to repeat that KYC process with those 5 providers, if I'm a fund operator, that's fairly annoying. So
Yeah.
having a system which allows you to have a reusable digital identity that you can share is obviously going to be, it's going to improve the onboarding experience and actually help our jurisdictions become a lot more attractive place to do business.
Absolutely. And the last point I want to make on this slide is do ensure your processes provide a bypass so that if a person is like, no, I don't want to participate in a EKYC, it's where you kind of take your copy of your passport and you do the live, facial checking, smile, turn your head, things like that. If they don't want to do that, because some people don't, maybe it's an older client, just not comfortable with that. Make sure they do have that bypass because that's something that I see. It's like, well, they don't want to do it or they can't or they get frustrated and then it just stops. So that was the only thing I would add to that too. All right, so we've got about 10 more minutes, so we'll probably skip through some of this or kind of fast forward a little bit. EKYC and workflow automation, I did like this because again, you've got those client portals that you can use. Is there anything else that you wanted to kind of point out on this slide?
Yeah, I mean, obviously, as compliance professionals, we know there's real three sort of important stages in the onboarding process. So you've got the ID KYC part, you've got the screening part, and you've got the risk assessment part. And there are different solutions out there to help in those different stages in that journey. So obviously, we talked about the digital identity verification to help with the KYC part. And then you've got, with the risk assessment part, you've got AI. Right? AI can help, although there are certain guardrails, and I really wanted to say that term guardrails. Sorry, every single podcast I've been to has used the term guardrails, so I wanted to use guardrails in this particular.
Yeah, I use it.
Session. It's the corporate buzzword of 2026, so I'm using it. But I think that with AI, you need to have specific guardrails, and that is really human oversight, in terms of that process. So because you do need human judgment in terms of risk assessment, I think that has, again, great potential there in terms of being able to, again, speed up the process if you could automate parts of that risk assessment process, especially risk scenarios. And then you have secure client portals, which, again, helps dramatically with onboarding in the sense that the KYC collection and distribution part, if you don't really want to go with the digital verification channel, also go through using interactive, secure client portals to actually interact with your client on KYC. And again, I think you find some efficiencies in terms of going through that route, although I'm always going to tell you that the future, and the future is now, is digital identification. Right? That's the future.
Yeah, I completely agree. It's like we can't just say, hey, get ready. It's here. It's here now. So the real opportunity is that commercial edge. Again, if you are dealing with these very technical innovators that are creating funds, doing digital assets, I mean, and yet they're asked to, oh, we need a certified copy of your passport. It's just, it's, it doesn't look good. I will even give an example. So being a vendor, I'm asked to provide these vendor risk assessments. And of course, part of it is I have to prove that I am who I am. And I'm asked for my KYC. So I have been asked to get a certified copy of a passport. As an American, going to my bank, I thought I'll just run to my bank, see if they'll do it. Nope, they won't do it. So I actually have to now go to a courthouse to do it because my CPA is in New York. They've never met me face to face. The lawyers that we use, corporate lawyers, they're elsewhere. They're not. I'm based in Arkansas. I don't use Arkansas, corporate lawyers. So I kind of went, you know what? I'll just fly there and let you take it. Let you certify my passport for me, my next trip. So, they were understanding, but it was just like, ouch, I can't even KYC myself using the old ways now. And
you're just illustrating exactly why it's, the move towards digital identification verification is actually a strong reasons now. Even the manual approach now has become tricky and causes, frustration for the customer. And I think when I kicked off this presentation, I talked about compliance as being seen as a business inhibitor. I think where you get the commercial edge and where compliance professionals start to look as a value enhancer is where we are going to present into the business ways in which we can actually give the business a commercial edge with a faster onboarding time and without any compromise in terms of financial crime risk mitigation. So I do believe that, in terms of using technology, if sourced correctly and used correctly with the appropriate risk assessment prior to its use, then you can actually give yourself an actual commercial or your business commercial edge in the market, just by having a very, very efficient onboarding that uses technology.
Absolutely. Okay, we're going to pause here. Tom, any key questions that we should be asking or addressing here?
We haven't had a question for a while, but this one came in about 10-15 minutes ago, and I think it was a follow-up to the previous question. But someone said, although compliance is the second line of defense, what if the onboarding team is not in agreement with their decision not to proceed with new business? Should they escalate?
Okay, so the compliance team is the second line of defense, and the onboarding team, so that's the first line of defense. In my view, are you understanding that one correctly, Ken?
Yes.
You're getting the same interpretation?
Yes.
So the onboarding says that they're going to resolve. I don't think they should have that ability. I think that should be escalated.
I agree, and that points to potentially a poorly designed compliance framework. When we establish roles and responsibilities, ultimately decisions are around taking on a client are usually the ultimate decision is the business decision, but that's obviously guided by compliance, and that normally would be line 2, who would normally have the individual there with the statutory role as their compliance officer or money laundering reporting officer. So I think, again, if you have a well-designed compliance framework, that helps you minimize some of the tension. So it's very, very clear in terms of what are the roles, what are the responsibilities, what are the escalation procedures, and that's particularly clear. Now it's up to the business to decide how they want to escalate matters or issues. But I think from my perspective, you minimize those circumstances arising when you have clarity in your risk appetite, clarity in your process, and that then creates less ambiguity around certain issues that may arise.
Yeah, and I think if I could just kind of say, it's like I don't think compliance should ever have the right to just go flat out, no, we're not going to accept this business. It could be escalated to the compliance manager, or if you're a small firm, the compliance officer, but then they work with the business, whether you call it the risk committee or maybe it's an MLRO. Again, it depends on the size of the organization, but to decline business outright needs to be definitely escalated with the compliance team or compliance officer or manager giving their views. But again, I think it needs, and of course, even if they go, well, according to our AML policy, this is why we decline. Again, that's why it's like, well, revisit the AML policy.
Exactly.
Yeah,
exactly.
It shouldn't be.
The policy is the framework. Within that policy, it should have a risk appetite statement, or covers, what circumstances, is a definite no in terms of a client, and that clarity should be there to help the online, the first line KYC team. The first line KYC team are not, suitably guided by, the particular policies and procedures that have been adopted. Then there's obviously a need to revisit those policies and procedures to, ensure that there is clarity of approach. So yeah, I totally agree with you, Kimberly.
Okay, great. Okay, we're top of the hour now. So you had some great slides on Web3 and privacy preserving. So we probably won't be able to go into it. Again, you are much more of an expert on the Web3 than I am. But I loved your explanation for those who are trying to figure out what are you talking about Web3. You kind of said if you want to use your analogy that you explained to me about, how would you describe Web3?
Well, yeah, in terms of Web3. So Web3 have, this important concepts. You've got the blockchain, you've got digital wallets, and you've got that idea of concept of decentralization. So the analogy I always like to use when we sort of talk about Web3 and Web2, Web2 is essentially what we now know as, what we're used to. It's the internet, right?
Yeah.
And I always use the analogy of renting an apartment. So where we live on Web2 at the moment, and anytime we want to post our pictures or post our videos, personal videos, we have to engage with a landlord like Facebook or X or Google to have the privilege of being able to rent within their platform. Therefore, we're obviously subject to their rules. So it's more of a sort of like a renting model. Now, blockchain, Web3 is essentially the blockchain, which is built on the internet, and it's really, if Web2 is France, Web3 is Monaco. It's basically a nice little principality where you're allowed to have certain different governance and rules. And by virtue of the fact that you have a digital wallet, for example, as part of that, the concept allows you to move towards the ownership model more than a renting model that you have under Web2. So the digital wallet gives you the potential to actually have sovereignty, to look at concepts like sovereignty and look at ownership. So that makes it very, very exciting for the digital asset space. That's how it's obviously helped in terms of its development, but also for us in terms of looking at identity, for example. Identity, we want to have sovereignty. Identity is unique, an identity that we own. So you can see how Web3 has technology has really potential there to develop the features that it has to actually develop the concept of identity credentials on Web3. The other facet around decentralization is Web3. This is a very crude analogy, is almost like a live transmission in terms of it's a shared digital record of transactions. So just like how live TV works. So when Neil Armstrong first walked on the moon, everybody around the world at that time, and I wasn't old enough to remember that, so just in case anybody else knows, that's my age, right? Everybody was, whether you're in India, whether you're in France, whether you're in Australia, you were all watching that at the same time. And Web3, effectively, the blockchain has that impact. It creates almost as a live transmission effect. So you can imagine how useful that is in terms of being able to expedite the sharing of data. So, for example, the example I want to always use is my nanny. She on Friday, I paid her after work. I paid her after about 5 o'clock. Then on Monday afternoon, she texted me and said, "Ken, I haven't received my money." And I actually looked on my account. And I said, "Well, the money's gone out, right?" And she said, "Well, it hasn't hit my account yet." Now, we can talk about the issues around domestic banking in Cayman, but it's a good example in terms of we have intermediaries. And those intermediaries we use two different banks, and those banks are responsible for processing our transfer. Now, where you're working with Web3, because of the nature of this decentralized, you don't have that concept of intermediaries. So things can technically be done a lot quicker, right? So it's really a concept that, again, in terms of us in compliance and sort of like developing products to actually accelerate the onboarding process, that's a concept that we can leverage that technology to be able to get faster onboarding, faster verifications, and also cheaper, because they charged me $5 to actually transfer money over to my nanny. $5, right? Because when you are dealing with Web3, you don't have that sort of concept of intermediary. So it's a lot cheaper. So that's why when it came to costs in terms of the poll, you actually will find that, in terms of certain reusable digital identification, verification, technology and providers, the actual cost isn't perhaps as expensive as you think.
Yeah. And whenever I talked about the cost, I mean, because I remember looking into these tools back in 2017, 2018, and it was just cost was so high then. Okay, I apologize. We are running out of time, so I'm going to kind of go through. But for those of you who are not familiar with Web3 and blockchain, please take a look at these slides when you get a chance. Kind of get it, and it could be, Ken, I asked you to do. Let's go do another webinar just on Web3 to kind of make sure people really understand it and how it can benefit. Because I think that in itself is a webinar in itself. But again, it's as far as like kind of moving on these slides. But yeah, the future's here. I mean, it's, you know, as far as these new opportunities, these new tools, we got Yomokin, there's as well. There's again, there's all kinds of new stuff going on. So do take a chance to kind of look at some of these and what it could do for you in your um, um, organization and help with your onboarding process. So again, the future is here. And again, for those of you who are worried about AI and the future of compliance jobs, we both agree we're going to be employed. It's, but that's okay. Don't worry. But we are. It's definitely, all this stuff is definitely changing our roles. We're going to have to be a bit more tech fluent. And less just, you know, administrative. I mean, that's been going on for a few years, but very more analytical and tech fluent, and using AI as well. And of course, I do hope we'll be doing some more webinars on those kind of things. So key takeaways. Any
Yeah.
last key takeaways you want? If you want to leave anybody with one last impression, what would that be?
Well, you know, technology doesn't fix everything if you don't have solid foundations, and that's a strong compliance framework. I think in terms of looking at the future, we have to get used to the fact that, you know, technology is not going away and is actually something that's going to help us. We should be, as compliance professionals, looking to explore technology and actually come into the business, being at the table and coming up with solutions that actually help your business. And you know, we start to change the perception of compliance as being business inhibitors, and transform ourselves as more as business enhancers. And I think that's something as compliance professionals we need to start tooling ourselves up with that type of ability to actually bring that to the table. The other thing I wanted to say quickly is, like, very soon we're going to have to realize that our best friends, man's best friend, or compliance man's best friend, is going to be Claude. So I'm sure Kimberly started to get, you know, very familiar with a good friend called Claude. I've got a friend called Vercel, who's a very good friend of mine. And I use Vercel for, you know, in terms of designing workflows. So no code and low code tools, automation tools, are fantastic. So if you're a compliance professional, I'd say get on the program. Start looking at these type of low code, no code automation tools, and see how, you know, you can use those tools carefully, because obviously, you know, I'm not infringing any company policies around, you know, usage of technology. But at least start having that using AI, start looking at what it can do for you, because it's amazing.
Yeah, it really is amazing, but you get absolutely, you must be careful. And I've used ChatGPT, Claude, and Gemini. I do use it, each tool separately, and Claude and ChatGPT are, I call, a compliance only diet. I do not use them for anything other than compliance related questions. It's all about the prompting. It's all about training. If it gets it wrong, I will tell it. You have to know your stuff to use these tools. It's not giving you it for, do not use it to give information. Somebody on my team explained it very well. He goes, it's an intelligence amplifier. Okay.
Exactly. And I do think the future, that it's important to know that critical thinking is still something that carries a lot of currency. And that's,
I don't even say still, it's more. We've got to be way more critical of what these things 100%. Are producing. And so you've got to know your stuff. You still have to read these regs and read everything, because it will get it wrong. All right, Ken, thank you so much. And this must be very good, because we kept pretty much our audience numbers throughout, even as we ran over.
I mentioned guardrails. Guardrails always elevates the importance of a presentation. You know, if you don't say a corporate buzzword, no one's going to listen to you. So I'm going to use that guardrail.
Exactly. So, so thank you again, and thank you to the audience. And even if we didn't get to your questions or comments, again, so simply because we've got so much to cover. And Ken, I'm sure we will have you back. And good luck with Zedra and you know, all the fund administration and the growth. I mean, I know everything's kind of, it seems like everybody's very busy and growing, and that's good. You know, but it can be a bit scary and overwhelming too. So for those of you who are kind of going through that process, again, we're here to
Yeah.
kind of help. And yeah,
Please
so go ahead.
contact me, guys. My email address is there. Any questions you have on the slides, on verification,
Yeah,
not about Arsenal, just talk a bit to me about QME compliance.
exactly.
I'm more than happy to just talk you through. We need to develop a community as compliance professionals where we're talking through these things
Oh,
together and growing.
I
And you do
I
a
have a
great job in
plan
that
for
space.
that. Well, this isn't quite enough, and I do have a plan for that I'll be announcing in hopefully in a few months, if not sooner. So, but yeah, it is an area where we can always be together, and you don't have to just constantly just wait for the next webinar, because I know that sometimes people have very specific questions. So I'll reach out to you about that as well, because I've said the same thing. There needs to be a community. How do we do this? So anyways, Ken, again, thank you. And to the audience, thank you.